following the collapse of Silicon Valley Bank, it suggested that they stepped into Signature early and that Signature wasn't about to fail. Now, I get it. Like, there could have been some contagion risk that was analyzed, that they were worried about what would happen, so they stepped in early. But there have been suggestions that this is part of this kind of Operation Choke Point 2.0, which, by the way, at first, I just thought this was like Bitcoiners being paranoid, and now I'm like, it's fucking everywhere. So what do you feel about that?
I've never heard of a bank being closed on a Sunday.
Well, isn't that to stop the Monday?
It is to stop the Monday. That's the overcorrection. But before that, what my point is I don't remember FDIC closing any banks other than on a Friday. It's just not done. The joke is that you don't want to see, the FDIC can come audit your bank, but if they're showing up on a Friday, you're looking for a new career. So like that's like the common standard, right? So if we look at that from a moment, what I think it calls into question is, it's a state chartered bank. So what did the New York Department of Financial Services look at or decide about? Perhaps there was a little bit of anti-crypto sentiment about it, and looking at what happened, not just with Silicon Valley, but the fact that you have, there's too many banks, Silvergate being wound down, saying maybe there is this contagion risk and it's applied to crypto firms. And so to be safe, we just feel like we need to shut it down. So they reached out to the FDIC. They looked at it. They probably did look at the Monday scenario, what it would look like if it actually opened up on Monday. And they felt that it would fail. I think we'll learn more. There's always this thing, it's called a material loss review in the US, where they review what happened during this whole process of the bank being closed. But I'd love to know how many people were withdrawing money from Signature over the weekend, because nothing stops you, right? You can, it won't happen until Tuesday, but you can start a process. So maybe they saw the amount of withdrawals that were going to hit. That's the only thing I can think of that would justify it, because this happened on a Sunday. Like, I don't know too much how you spend your Sundays here in the UK, but in the US, people are going to church, they're watching football, they're not going down to their local bank. So clearly there was a lot of factors to say on a Sunday, we need to close. And that's where I think the question is that Barney Frank brought up, who was on the board, right? Who said, I think this is a little bit of an attack on crypto. I think that's a little bit of a signal here of saying maybe there was this determination, like in the NYDFS's mind, a fair determination that crypto is a risk to the banking system, because you had Silvergate fail and you had Silicon Valley Bank taken out, that to be on the safe side, we need to preemptively close the bank. But that's the key, though, the preemptive part. And that's where you have to remember, with Signature and with Silicon Valley Bank, I hear a lot of people talking and like it's incorrect because they keep talking about, well, this is going to show that the least cost test won't be met. So the FDIC's least cost test means if you close down a bank, you have to make sure it's going to be the least cost to the taxpayer deposit insurance fund. There's certain present value discount, rate you have to run to sort of figure all this out. The FDIC board and the Federal Reserve Board voted, and it's in law, to override that least cost test. And that's what Treasury Secretary Yellen said, is that the FDIC and the Federal Reserve Boards can make a recommendation here to say, it doesn't matter. And that's how they backed all the depositors. That's why there's going to be a $20 billion hit to the FDIC Deposit Insurance Fund. You probably heard that number because of what's happening with the Silicon Valley Bank, but that doesn't matter because this is all done under an emergency situation, which, again, takes us back to the Patriot Act, the Emergency, the Restrict Act, the what do we do in times of real crisis? And do we end up with something that's way too broad that people decide to...
It's like we're in permanent crisis at the moment.
Yeah, but what I would say is there's a question on people's mind that we'll never know, which is, would Signature Bank have made it out? Remember, what was it? Silicon Valley Bank? One of the banks had a huge run that they were able to survive, right, for a couple of months.
Silvergate did really well.
Silvergate, right. They had been hit, and they took all those FHLB, the Federal Home Loan Bank, loans that saved them. So they were able to weather it. But we didn't give Signature a chance on Monday to say, will they weather it or will they end up bankrupt?
And Silvergate wound themselves down and made every depositor whole, I think, didn't? Is that right?
Yes.
Yeah.
Yeah, Silvergate just shut down its operations eventually. But we we'll never know if Signature Bank had a fighting chance or not on Monday.
So do you think Operation Choke Point 2.0 is a real threat? And do you think it is a coordinated reaction?
So my take on Operation Choke Point 2.0 is Operation Choke Point, the first one, that was after payday lenders and all these like buying guns and things like that. It was done very secretly. There wasn't anything openly from the administration that we need to do this. The funny thing to me about Operation Choke Point 2.0, and I keep trying to tell everybody this, is it's out there. Like the White House put out a memo. You can go back. It says the risks of the crypto system. I think it says of January. And in that memo, the White House says cryptocurrency is a risk to the banking system of the United States. Everything should be done to keep that risk out of the banking system. We shouldn't be encouraging people to use crypto in banking. Like it's all there. There isn't like, so yeah, I think there is a Choke Point 2.0, and there's a memo in the White House that just tells everybody. Now, the question is, regulators like the Federal Reserve and the FDIC, they're supposed to be independent, right? But they're going to be influenced, right? They are an independent agency. Like if the White House does an order, they don't have to follow it. The Treasury would have to. But Federal Reserve, FDIC have this privilege of being an independent agency, so they don't necessarily have to listen to the president. But I think you can be influenced by them.
Yeah, and look, this is one of the things that I think is frustrating, or I think gets lost in translation, is this kind of confusion between Bitcoin and crypto. And when people talk about crypto being a threat to the economy, yeah, maybe it is. Maybe there would be such a massive bull run followed by contraction that could lead to some difficulties within the economy. And yeah, there could be huge losses, and we don't know how much leverage would be in there. But yeah, I think a lot more needs to be done to separate Bitcoin as an asset class from crypto. And look, I would happily sit down with any senator and talk to them about this and explain to them, look, I'm anti-crypto. And this is why I care about Bitcoin and why Bitcoin is important, because I think most of it is bullshit, and it's become a real frustration for me. And so this is where I'll give a nod to the maxis, because for years they've been doing this. They've been saying Bitcoin, not crypto, and Bitcoin, not blockchain. They've been creating that separation. But when you hear it discussed in Congress or in media, there's a blurring of that. Not always, but sometimes there is a blurring that. You've got these like centralized institutions that are muddying the conversation regarding Bitcoin, and I don't think that's helping anyone.
Well, I think the issue with crypto, if we can separate it this way, is that crypto is susceptible to the same issues that banks can be susceptible to. But then it's almost even more dangerous because there aren't regulators overlooking at it. Exhibit A is Sam Bankman-Fried. A lot of people try to say Sam Bankman-Fried is the anomaly, right? He's the Bernie Madoff and did all this stuff and isn't really a result of the fact that he wasn't, regulated. And he was trying to change regulation. To me, that's more of a psychopath who's trying to change regulation in the Congress while he's doing all this really bad stuff behind the scenes. But, when you look at crypto, to me, it's trying to do things in a different way with computers and information technology, DeFi and all that stuff, but in a way that is there's still centralized people involved that can really mess you up. With Bitcoin, you don't have that, right? You don't have the potential of mirroring the way the banking system works now, of where a few individuals or a group of people could somehow impact, your wealth. That's where I think you can start that division. And I think that's an important and valid one. That's why I've been pushing with like Texas with the Bitcoin, the resolution, right? Because the immediate criticism that's going to come up is, well, why are we just saying this for Bitcoin? Well, Bitcoin's proven itself to be different than anything else. There hasn't been anything else that's come along yet to be and act just the way Bitcoin does. So there's something to be said, maybe. This shows you how maybe corruptible we are as humans, that we need to put something that sort of runs now in this fair system into, computer language where we won't have certain people taking advantage of other people. Everyone has a fair access and can use it. And that's the thing, like, we keep talking about like the risk of Bitcoin to the banking system. Like it's been they've called a threat, but I mean, the banking system has a lot of other threats.
It's important to explain what that threat is. It's a threat to the banking system, a bit like how Netflix was a threat to Blockbuster.
Absolutely. What I guess I'm trying to say is like when I look at the 2008 financial crisis, that was a failure of the large banks that allowed Bitcoin to be introduced. So it's almost like Blockbuster had a bad moment. People realized Netflix.
And the ratings agencies with their ratings and the failure of the regulators. Like 2008 was a failure of multiple institutions or bodies or businesses. Mm-hmm. But the threat now is they're threatening innovation. They're threatening Bitcoin.
Yes, that is correct. It disintermediates the banks. You don't need the banks the way they function today. It threatens the banking industry.
Yeah, exactly, which might not be a bad thing. And listen, if I could store all my bank deposits in a hardware wallet, a bit like I do with, say, Bitcoin, if I could just do that, I would. And I also think about stable coins, but I don't trust them. I've got an issue with stable coins. Can they be censored? Can they be shut down? But I don't like the banks either. I mean, I go into one of my bank accounts and I want to withdraw £2,000. They're asking me what it's for. And it's like, hold on. I didn't ask you what you were going to do with it when I deposited it with you, but you want to know what I want to do with my money. It's like, fuck you. This is none of your business. And I've had so many bank accounts closed down, and closed down for different reasons. Closed down for telling them that what I spend my money on is my business. I've even had one closed down because one of my sponsors was a crypto company. Like, fuck these people.
But I don't think stablecoins fix that, because you're just reliant on someone else's bank then.
Yeah, that's what I mean. It's like I have to trust Tether's relationship with their bank.
I can't argue that, yes, in that degree, Bitcoin is definitely a risk. I'm not going to, but to me, it's more of a threat than a risk, right? Like, to say Bitcoin is a risk, it's like you said, it's an innovation. It's something that can be done much better. But here's the thing, Peter, and this is where we did some sort of design thinking for a second. Let's just say all the banks are gone and we're just operating with Bitcoin. How people get homes? We have to, this is where, we have to really think about, maybe to me, I'm not an all or nothing kind of person. I think Bitcoin really can become mainstream in a fast way. Use it on the weekends, whatever. Maybe people still need, or there still are use for banks because people still are willing to put some of their deposits there, right? Not just eliminate it altogether, because they know that part of it is they also might need to go to that bank for a loan to get a house that they can't afford.
And I'm with you on all of this, but Bitcoin is a threat because, and when I say threat, I don't mean necessarily it's going to destroy the banks, but it is a threat. But I think you need both. Like my father over there, bless him, like he's not going to be able to set up a Bitcoin wallet. He's not going to be able to manage his private keys. And my daughter isn't. But she's got a bank account now. She's got a card. She can go and tap it. She can make payments. And so I think we need both. Yeah. But I also think we need them to stop fucking with our money. Like, if these banks are failing, let them fail. Stop interfering.
Well, it's interesting when you talk about like the banks fucking with their money, because Silicon Valley Bank is, it's a horrible thing that happened, but it's so ironic if you think about the fact that it was related to interest rate risk, meaning it was the Federal Reserve raising rates that caused one of its own banks to end up failing. I mean, the irony of that is, talk about too many cooks in the kitchen. You're trying to raise rates to stave off inflation. And what bothers me a lot about that, and to your point, is interest rate risk is like one of the most basic risks that you learn, like in my bank examiner school, okay, there's this thing called the CAMELS rating. And it's capital, assets, management, valuing the management of the bank, earnings, what the liquidity is like. And S is sensitivity. S is sensitivity to interest rate risk. So it's literally one of the 6 major factors that every regulator evaluates a bank on when they go see. And there's a broad history of banks having problems when the Fed starts raising rates. So somebody was asleep at the switch on Silicon Valley Bank to allow all that to happen. Someone should have been alarmed immediately. And we'll learn this later. That's why I keep going back to, keep in mind, there'll be like a matter, anytime it requires a material loss review. And there's a material loss to the FDIC insurance fund. We'll learn all about it. I'm not necessarily saying it was as, real like misconduct, but if it was incompetence, that's really scary.
You know what I want, Jason? I want to be able to store my money in a place that I trust. And I like Custodia. I like what Caitlin Long's trying to do. I think 108% reserve-backed bank. I want to be able to use a service like that. I want to be able to go to a place and say, here's my money, store all of it, and charge me for that. Be my custodian.
Yes.
I want that. That's all I want. I don't want to have any risk. I don't want to go into a place and think they're fucking with my money. I don't want to go to a bank and find out they're bust one day. And you know what? If I use a bank and they fail, great, let them fail because I trusted them. But please just stop fucking with our money. Let the economy work the way it's meant to work.
I agree. I think you should have, the problem is, and it's so interesting that you said that, because if you look at Caitlin Long and what she's trying to do is really important, because there is this notion by a gentleman named E. Jerry Corrigan. E. Gerald Corrigan was like right-hand person to Volcker, during the Volcker experience at the Fed. So Federal Reserve Bank, and he wrote this essay. And the essay, it's very famous. It's called Are Banks Special? And the argument the Federal Reserve put forward is banks are special, meaning they're different than any other industry. And it came up with a different paradigm for how we need to view banks. It said banks need to be the transmission for the monetary policy of the Federal Reserve, like the transmission gears. Think about almost like a car. In other words, we need to be able to control people and how they're spending their money. So that's a key instrument that a bank plays, because we can raise or lower rates and the banks will follow suit as we need them. So they're a transmission gear to monetary policy. We have the FDIC insurance that protects them. Banks are special because they can get loans from a discount window at the Federal Reserve. So if you're ever having a problem, they can get loans. It's essentially defined the way banks are viewed. It's banks didn't used to be viewed this way. It's really a creation since 1913 with the Federal Reserve of how we view banks. Banks used to be, back in the 1894 California gold rush, it was, hey, I just got all this gold and I want Peter as a customer. I got to prove to him I have the best vault in my bank. It'll be 100% backed. I got all your gold, but you want to know, do I have the best vault? So the banks that succeeded were the ones that had the best vaults and kept the robbers out. That's what we're now down to in the digital world here, is people like Caitlin Long coming in saying, this is not what banks were intended to do if people want to save money. But there is an argument that's still talking about this transmission belt of the monetary policy that's saying, well, if you're putting deposits in, Peter, don't you remember, what's that famous movie about, life is good? I'm butchering It's a Wonderful Life. You put some money in the bank, and then this other person can take that money and go get a home. And that's the one question about the world you're envisioning, which is not a criticism, because you're right, you should be able to do that. But then everyone's going to say, but then how is that other person who doesn't have enough money to go buy a house, where are they going to get the mortgage? And that's where that whole vision of banks from E. Gerald Corrigan comes into play, and where we have to question, what should a bank be able to do, and how can people afford homes, right?
I saw a tweet a couple of weeks ago. It might have been Lynn Alden, but I could be wrong. That was said, banks aren't really banks. They're basically long duration bond funds.
I mean, look at Bitcoin custody, right? What do? They're competing on trust, whether it's Coldcard or Ledger or Trezor. They're competing against custodial centralized services. Which one do you want to use? There's multi-sig solutions. Everything that you have with your Bitcoin, however you want to store it, is a competition on trust. And it's a bit like what you talked about with the gold rush. Which banks would you use? How would you know which ones to trust, which are the most secure? Mm-hmm. But that's all it is. There's different incentives out there. And look, I maybe just want a full reserve bank. But does that mean we're going to get rid of other banks with free services? No, because not everyone's going to want to pay for that.
Absolutely. Yeah, and I think that, if anything, because you have the 100% reserves, there's certainly a way to do that. And again, it's what is born in crisis, whether it was 1913 to not let banks have crises, or 2008. People have needs, and we are having the version of the digital gold rush where people are looking for that security. So that's where Caitlin Long Bank is likely to win. What happens is, when our political system, the economy becomes part of that political system. And I mean, you quoted Abraham Lincoln at the beginning of the show. Abraham Lincoln started the national greenback currency to try to raise money for the Civil War. It's very interesting. I don't know if you know this, but the Secretary of the Treasury at the time wanted to put "In God We Trust" on those greenbacks, which exists now. But back then, that didn't go through.
Was it full faith?
Full faith and credit of the United States government. But it does now say, if you look, it says "In God We Trust." But it didn't say it back in 1863 or whenever that was issued, because Abraham Lincoln said, I'm just giving him a piece of paper. He even knew. He's like, this isn't gold, this isn't silver. And he actually told a parable where he said, I'm sorry, with Peter and Paul, I can't give you gold and silver today, so please accept what I'm giving you. But he did that in the idea of, we have to win the war. We have to solve that. And so that's when we face these issues that override the issue of a gold rush of needing the vault, of saying, but hey, we have to raise money because we have to keep the whole country together. It's not much different than now, right? Nation states, Bitcoin, what's the balance between the two?
Well, there's a lot going on here. There's a lot we've discussed today. Operation Choke Point 2.0. We've got the expansion of the BRICS nations. We've got banking failures. We've got people looking at using alternative currencies. It is a it's a really weird time and there's been a lot going on. It's great for us. We get to make a lot of interesting content. But just to finish off, like, what is the stuff that you are thinking about right now? What's keeping you up at night?
What's keeping me up is I don't really know if the quote unquote banking crisis is over. We've done another temporary measure, but it was a process of many months and then a couple years where maybe we'll face the repercussions, like you said, of we overcorrected in 2008, right? But we didn't necessarily solve the problem at the time. And if it happens at a later date, maybe this is that later date to pay that check.